Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, April the 5th. The year's 2022. Let's talk trading. Your trading plan. These videos are for educational purposes only. Your results may differ from mine. Yesterday, I talked about risk, which would be part of your trading plan. Risk management. But I thought maybe I jumped the gun just a little bit, especially for the folks new to the channel. Your trading plan. Do you build it yourself? Do you buy it? When I say buy it, quote unquote, do you use somebody else's? You can either, pay for it or read about it on a forum or YouTube, or see it on a YouTube video, hear about it on a blog, etc. I mean, there's lots of people out there that would love to separate you from your money, um, and give you a trading plan. Now, the thing about it is that most trading plans, they focus on the entry, and they basically lead you to believe that if you use their plan, you're going to make a lot of money. And that's just how they do it. So the thing about it is, what I really want you to think about is that how much experience do you have trading, and do you think you're going to be able to come up with something much better than, say, 90% of what's out there? I mean, and if you do, then there must be something inside you that makes you feel that way. I know that's what happened with me, because when I got into the online trading game, I'd already been trading for a while, had that experience behind me. And then when I saw the code that was being put out there, to me, it was just horrific. I go, I can do much better than that. And I pretty much, at the beginning, was just writing the code to make the indicators much better, the code much better. But then I started to notice that, some of these things aren't working. I mean, I was using Bollinger Bands. I was using moving average crossovers. I was using RSI. I was using MACD. I was using stochastics. And it was just a continual search. And I spent hours. And I'm talking lots of hours, a couple of years worth working on these systems, trying to refine it, linear regression. I got into a lot of stuff. But then, just by looking at the charts, I started realizing a few things. And that's when I started running statistics on just price movement, range, high minus open, open minus low. That's what led me to creating the buy zone. Now, there was somebody that posted something. Let's see, let me go ahead. Here's the buy zone. They posted something. They say, hey, if you find something that works, why would you not use it? Why would you stop? Well, one reason is there might be something that works better. That's like saying, hey, you can get from A to B on a horse, why not just keep riding horses? So there's always something out there that's possibly better than what you're doing. And that's also one of the things you have to look out for. That sometimes it's shiny object syndrome, which we talked about. That's part of brain management. But other times it's something that you can actually, prove with statistics. So, back when I was trading stocks, equities, this is what I would do, because every day when the market opened, price has to move away from the open, just like here in Forex. And you can see today you had some triggers, and depending on how your stop loss is triggered, maybe you stopped out here, maybe you didn't. Maybe you only stop out if the price closes below the daily open, or maybe you stop, or maybe you say close below the daily open, or if it actually hits here, because from here to here's 20 pips, maybe that's your maximum stop. It's up to you how you trade it. So I was trading the buy zone, and then what happened was, looking at the daily chart of the pound dollar, when I would scan the charts every day, because one of the other things I got used to trading stocks, I would look at a bunch of different stocks. Well, with the foreign exchange, depending on time of day, it might not be in the buy zone. So that's one of the reasons I created dashboards, so I could see if stocks were in the buy zone. So here I can see, the euro yen is in the buy zone. And we have anything else? Dollar yen's right at the open here. And so I could see, hey, I've got some other trade opportunities if I want to trade the buy zone. By the way, before I forget, right here, the launch pad, you can see the pound just took off right through the launch pad. The 40s went all the way to 60. So, I looked at the daily chart and I kept seeing these big wicks on the pound. And that's what led me to create the rat, the rat zone. So in the case of the buy zone, you're trading away from the open. In the case of the rat zone, you're trading back towards the open. So the thing is, your plan, you really have to look at, what are you doing? How are you putting it together? What tools are you using? Because if you want to use squiggly lines, you go right ahead. There's plenty of people out there making money using squiggly lines. But the thing is, let's not let any of this fool you. Because as stated before, once you put the trade on, the reason you entered the trade, you just put that off to the side, forget it. All that matters now is how price moves after you enter the trade. Does it move in your direction, or does it move against you? Now, one of the things here, what I call the launch pad, whenever the pound gets into the 40s, whether it's 31.40, 30.40, 32.40, etc., it just seems to want to launch, especially if it comes up to it as opposed to down to it. So that's just something I look for. So right now, the red rats need to prepare because we're in the red rat zone. And so you have to wait for your short entry. And somebody sent an email asking, well, if this is green and this is green and this is red, can I take a short? It's like, of course you can. You could take a short if they're all green. It just depends on what your trading plan tells you to do. It's just that a lot of people, a lot of traders think that once they get their trade signal that they should automatically get an opportunity to take profit. It doesn't always happen. It just doesn't. And so question is, well, do you want to have more than one method in your arsenal? Well, I would say that's one of those questions that has the famous, it depends. If you're profitable with your first method, then maybe you might want to, because maybe you see another opportunity. But if you're not profitable with your first method, then maybe you need to find that first method that you are profitable with before you start adding a second method. It's kind of like juggling. You start juggling one ball. I know I've used that example more than once, but that's just how you learn how to juggle. At least that's how I was taught to juggle. And when you go back and you look at these charts, I talked about the weekly open. We've talked about pivot fading. In this case, we broke out of the opening range here for the day. Or I'm sorry, for the week. We broke out of the opening range for the month right here back at 31.52. We know price needs to range away from the weekly open. And so sometimes you can use those to your advantage. We had 360 pips away from the yearly open. You can look at the seasonality indicator, and it's saying that April should probably be an up month. I showed you the chart in yesterday's video that showed how many times over the last 20 years April was green versus red. And sometimes it's just little things like that that might give you confidence to take the trade. Because it doesn't matter what plan you have, if you're not confident in it, which is part of brain management, you won't pull the trigger, or you'll hesitate. You might miss the entry. And if you miss by a pip or two, that might be the difference between taking a small loss or break even, or rather taking a small profit or break even versus hitting your stop. See, we had an inside bar 3 bars ago. We're 10 pips away from that crossover. So you might want to see it's right at the 75 psychological number. So we'll see what happens there. 61 pips on the day. Just a few moments ago, this was in the 40s. That's what can happen in an hour or less. And you can see here, we definitely expanded that range by about 20 pips. So, for example, in this hour, we've gone from not being able to take a rat trade because the range was too low to the range is now large enough you can start looking. Pivot trading plan. I'm not sure why I set this on daily. It should be on H4 or less. So price near R1, bias is short. Well, that didn't work out too well the third time. So once, twice, at least on H4. Nice move. We're at R2. We've got the monthly pivot, weekly R1, weekly pivot. It's already been taken out. So you can see here we're approaching a couple of these missed pivots from a few days ago, 6 and 8 days ago. On the weekly and the monthly, still have to hit those pivots, or statistically, we should hit those pivots. Nice break out of the wick zone. So, somebody say, well, what about the wick zone? How'd you come up with that? Once again, it was just by looking at charts over and over and over again and running statistics to see, hey, this is a possible method. And in fact, the wick zone, if you look at the statistics, is the one that is usually gives you the most chance of having a winning trade. About 70-some% of the times, price is going to close outside that wick zone, so that means it's going to cross over. Nice trade here, wall mall method at the 40. So, fellow traders, I want you to think about your trading plan, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.